Section 40 A3 and 6969 to 71D. Section 111 advanced April 20 advances of 3 lakhs given to supply in cash and 30 small goods supply the 3 lakhs in advance. Section 48 attract 3 tried previous year 3 lakhs be disallowed. 216 SC however attracts itself the hand and chance to supply and receive cash greater than 2 lakhs and shall be liable to penalty to substitute that is 100% 3 lakhs in penalty. Section 41 profit of chargeable to lakhs for recovery of losses or expenditure. The loss of expenditure where the loss of expenditure alone and deduction is subsequent year amount with respect to the loss of expenditure amount is recovered deemed BGVP and the income which is recovered between the business and not expense. If the amount is received and by successor BGVP's hands of successor PY in the same for the remission of the session of the trading liability where the reduction is allowed under the trading liability subsequent there is a remission of session therefore amount of trading liability so sees the deemed BGVP income and why even the business is not existence. See the re-emission and commission of the re-emission and commission of the success. BGP hands of officer and financial in which emission of session take place. Putting up liability. Liability amount associated with the consideration of emission concession liability. With the time bearing depreciation on item of the books condition liability 41 year gets attracted time bar rates. Now at return of books 41 3 attracted by trade liabilities. The personal loan late in the friends and non-trading activities 41 year after favor of that personal loan excellent 4626 IFS which is made the loan was taken by the business purpose favor of such loans income to 24 and 8 favor of working capital trading liabilities 41 and 100 favor of loans for purpose of capital asset as not trading liability however is amount of reduced cost of asset balancing charges are just discussion on 3211 scientific research assets sold without the use of lab business. Discussion on Article recovery of bad apps discussed 36 months. By BGP is no longer exists in the case of income tax at all 46 4133 any loss and other security business which is was on the basis of provision during the previous year ceased to be exist and could not be set off in the previous year may be set off when the gains income even the expiry of 8 years and the losses of returns would not find without the due date of the Section 42 special provision for reduction of business for prospective example mineral oil. Eligible SSA wasn't carrying on business prospective extracting and production of mineral oil including petroleum mineral gas is associated with the capital gain accurate area common the action the following addition allowance in lieu of an addition to the normal provision of the act infrastructure and abortion explosion expenses prior to the beginning of the commercial production expenditure incurred before and after of the beginning of the customer production as drilling activities or service or any exploration activities service or physical assets are used to explore expected to the assets are identified to depletion of mineral oil mineral area privacy or commercial production of beacon and activities in activities of the specific condition of allowance only if the specific agreement is between SSA and the central government. Mahara production shall be a prescription agreement transfer in the case where the asset in which action is claimed and transfer some same treatment 35. Section 43B certain deductions are only for actual payment, notwithstanding anything contained in any other provision respect to the act deduction allowance tax duties is free. Only pay without deductions. Employer contribution PEF, actual management fund, and gratuity for other employee fund welfare not applicable to the employee contribution. Bonus and commission payable to employee 36 interest on any loan borrowing from NP, PFE, SEF, superannuation, SSI, other agreement, NBFC notified the central government per agreement, and the Sexual Bank Cooperative Society, other than primary agriculture credit society and rural development are covered under the county and some payable in the employee in lieu of any leave at employee calculate any payable to Indian drivers use of an railway asset of right payable use of railway coaches of railway buildings or rent advertisement actions also payment of micro medium small enterprises paid on the time limit section 5 MNC allowed the deduction only in the previous year which has been paid in respect of the accounting treatment Exception in section 43b, except in the clauses if such a sum is actually paid or on before of the due date of financial return. 139(1) with respect to the previous in liabilities in current action shall be allowed in previous in which liabilities in assessees following actual method of accounting. Explanation: converting interest of loan does not amount to payment. In the case of interest or any loan and borrowing, such interest shall be allowed only if the interest is actually paid. Interest of the converted into loan and borrowing and debenture shall not be deemed as actually be paid. Provision of the section shall not apply in the case of received and assessee for the employee in which provision section 2 clause 24x applies. Employee contribution to PF. Understanding the payment of MSME Financial 23. As per Section 15, MSME the Act mandates payment to micro, small, medium enterprise 40 days in the case of a return agreement and 15 days in other case where the assessee failed to make the payment within the time limit and such allowance in the previous year is actually paid even the payment is made before the date of return agreement shall be allowed in the previous year is actually paid. Illustration: invoice on to due date 31st actual paid for and due date return is 13/10 yet we are 44 not of the previous year. The furnishing of the bank guarantee with respect of some payable does not amount to actual payment, unlike the interest amounts as sales like liability converted into loan pursuant to the government order shall be allowed to be in the year in which it is converted to loan. Prepayment premium, the yearly payment of loan, some treatment of interest, saved plus interest. Bonus paid to trust instead of the employees to comply with section 43b. With the deduction is allowed. No, it is not paid to the employee before the year, so it is converted actually the paid. Until paid for it is a paid amount to trust and the transfer to the employee before section 139. It is allowed the Sohan chemical interest payable on GST as part. The GST itself covered and interest payable on GST. Found on GST, so itself covered in 43b. The electricity fees covered in the 43b no. Electricity fees covered in 43b no. The debenture issued by the financial institution of interest accrued will be treated as actual payment 43b no. The acquired technology section 43b special provision of computing cost of acquisition certification of cost of acquisition for PGBP capital asset acquired by amalgamation companies or sold in stock or trading. The cost of asset is equal to the asset is to amalgamating company plus improvement loss expense on transfer. Cost acquired the transfer from partition of a GF or gift or a bill sold on stock and trade. The cost of acquisition plus asset is transfer or donor plus improvement cost plus expense on transfer. In Section 43C, a special provision of full value consideration for transfer of asset other than a capital asset. Applicable there is a transfer of asset before the land and building both. Consideration of the transfer FAC is less than stamp value duty in determined by capital goods. Consequences SDV is deductible to the full value of consideration for computing BGBP. Exemption: the SDV does not exceed 110% consideration amount. Actual consideration is equal to D into fair value. Date of agreement of date of registration. When the date of agreement and date of registration are the same, the STV or the date of agreement provide that amount of consideration or part therefore is received by a single mode or before the date of agreement. Eligible mode is equal to account payee mode or account payee check ECS or other prescribed mode. Section 50C and 3 continue to apply. Discuss in the capital gain. Section 43C computation of income from the construction and service order. The profit and gains to be deemed to be percentage and completion model ICDS 142. However, profit and gain shall be determined as follows. From project completion method for contract or duration less than 90 days. Cycle method for contracts including determination number of contracts over period of time or period of time. For the above purpose, contract revenue is including retention money amount held for the client for the paid later. The contract cost shall be deducted by the incidental income like interest, debit, and capital expense. ICDS 3 construction contract. It is only recognized the completion method recorded the contract revenue and associated contract cost. Section 43D income on FPI companies, public companies, interest income prescribed categories of bad or household types shall be taxable in the previous year in which is credited in the pre-internal account and is actually received whichever was earlier. Section 44A introduction case of trade professional symbol associates applies to trade professional symbol associates where the income is not received to members. Next, amount received from the members or subscribers expense of advance from members. If there is a benefit allowed for reduction of BGP, it's no assessable income. I just again the head. Before setting up the deficiencies, effect shall be first given to the reduction under the Act of Direct losses and allowances. Total deficiency which is set off of loss and shall not exceed 50% of total income computing before the given reduction of efficiencies. Section 44A compulsory maintenance of accounts. Maintenance of accounts, existing business and new business, specific business, specific profession. Gross receipt exceed for 1.5 lakhs on all press releases. And new business gross receipt likely to exceed 1.5 lakhs in the previous year. Business and non-specific business income crosses 1,20,000. Turnover was 10 lakhs in any new business. Income was 1 lakhs and turnover crosses 10 lakhs in every previous year. In case of individual achieve above limit has been income is 2.5 lakh into 10 lakhs and turnover is 25 lakhs. In case of deemed profit of assets 43AA, 44BB, 44BB, assessee claims income is less than the deemed profit, they need to provide books of account. 44ADA for 4, 44ADA, AD part 4, 44ADA part 4 applies an income exceeds basic exemption limit. Time period maintenance of SEO for 6 years at the end of relevant assessment year. Place where the profession has been carried out on the principal place. So more than one place. Penalty 271K. Failure of AA, A1, CAT is applied to pay 25,000. Special provision legal, medical engineering, architecture profession, accounting, technical consultancy, interior decoration, other notified other professions notified by the board, authorized representative, film artist, actor, cameraman, director, editor, singer, linguistic writer, press signature, company secretary, information technology. Section 44A audit of accounts. Limit of the prescribed in case of business or total sales or cash turnover received exceed 1 crore in the previous year. Benefit as having like less cash transactions, amount received is less than 5% and the paid is less than 5%. The total limit is 110 crore. In the case of professional gross will be exceed 50 lakhs in the previous year. Special cases of applicability by the assessee cover 44AA, 44AE, 44BB, 44BB claims income less than deemed income. The profit deemed profit is 44ADA and the claim income is less than the deemed profit and the income is greater than BEL where the 4484 applies and income is greater than basic exemption limit. Audit report when the modes C covered above are required to get their accounts audited by the accountant. CA having COP and furnish audit report and prescribed form C3, 3CA, Form 3CB and 3CD by specialized date as 1 month prior to the date of the return of income format of auditable. The Form 3CA, the person is required to get the auditor under any other law. Form 3CB, a person is not a person required to get the auditor under any other law. Form 3CD particulars to be furnished. 44AB is not auditable. Three CB and 3CD particulars are furnished. 44AB are auditable. And otherwise auditable in the case of payment of assessee attracts disallowance in the 40A and 43B. Revision can be done by the accountant before the end of the relevant assessment year. Other law audit when the assessee is required under the law any other law and get books auditor. It shall be sufficient that accounts are audited under the law before the specific dates and the audit report is furnished in the requirement under the law of co-optation and the furniture report of a company's account under the section. And applicable person who declares income 44ADA, 144ADA, 144AB and 44BB is not audit applicable. Failure penalty 44AB audit report. The EO is directed to pay over 1.5 lakhs and 0.5 savings T1 share. Note the section the receipt of the check are drawn on the banks on other bank which is not acceptable which is an account payee shall be deemed to be a receipt of cash. Detailed sale turnover gross receipt received in the detailed sale turnover gross receipt discussion chapter. Concept of clarity in the assessing the AAC is providing professional services to cross over to course. He has no cash receipt all payments and he all the received payments via account page. Tax and particularity that limits to cost on the case. There is no option for the profession. In special provision of computation of profit and gains, particularly SC 4480, 4480, 4480, special provision of computing business profit and business and 4480 business on the presumptive basis. 4480 profession on presumptive basis, 4480 business on buying, hiring and leasing of goods carrier. Eligible assessee or resident individual GF resident resident of forms as any other LLP resident other than LLP, and it also has not claim reduction under 4410 or chapter 6 part 10 IA 10 RR. These do not present income individual Hajj are not including Hajj forms and other than LLB engaged in specific profession 44A training for associate who was not more than 10 goods carrier or any other previous not applicable specific profession under 44A legal not applicable income and the nature of commission brokers and applicable agency business not applicable eligible business any business other than the turnover is less than 2 crore except a 44A business the limit is 3 crores if the cash is less than specific promotion total gross turnover is less than 15 lakhs limit is 75 lakhs and cash receipt is less than the total turnover or gross receipt business applying hiring and leasing of garage present to taxation and book profit 8% of the turnover or gross receipt or the higher the amount claimed by earning by the associate 6% of turnover or gross receipt by the account pay on account after ISA percent during the previous during the year 50% of gross receipt or higher the sum claimed to be earned by the associate heavy goods vehicle more than 12,000 kgs 1000 per ton with a gross vehicle weight or the unlaid weight and each month apart where the ownership is 4,000 per ton the gross vehicle weight and unlaid weight of each month part where the partner ownership is paid higher sum claimed to be on other vehicles 7,500 per month part of ownership previous in higher sum. Not allowable reduction section 44 AD override section 28 to 43C no reductions allowed on 30 to 38 no reductions allowed on 42 or 40 even the cash payment is more than 10,000 no current year losses buffer loss cannot be set up against a deemed income under 44 AB reduction under the section reduction under 80C to 80GGG shall be allowed in the case of 44 AE only the associate the form of remuneration and interest paid shall be deducted under section 40B. WTV shall be calculated on the depreciation claimed and actual allowed as per the relevant year. Requirement of accounts of 44A, 44AV, section 44AD for the associate declares a profit of 44AD each year. Then it is in 5 subsequent year profit claim profit for 44AD is less than the profit. He shall be eligible for claiming 44AD profit more than the next 5 years for the previous year in which 44AD profit was. Associate in which section 44AD applies and total income is greater than the basic exception limit and maintain books of account under section 44A and audit under section 44AB. But as a Z claim profit less than the 44AD profits and the total income is greater than the basic exception limit, they maintain the books of accounts under section 44A and case audit under 44AB. If assessee claims profit less than 44AE profit, section 44AE, 44AB and tax advance tax not required to pay installment pay it on one go before 15th March. No exception from payment of advance tax. Also presumptive taxation of under section 44A based on the ownership is not one whether the vehicle is put in use. 1 ton is 12,000 kg. Heavy vehicles means vehicles more than 12,000 kg. Unlaid weight is relevant generally to case of tractors and road the associate who owns more than 10 tractor anytime in previous year 44A shall not be admissible. Now the forms of the form 44A and furniture they are declared in the effect of TDS shall not be time limit to understand the 44 tax rate. 0 no tax rate under the 44 AB 1 up to 1 crore 1 crore to 2 crores no tax rate if the option of 44 AD and 2 to 10 crores no tax rate in the case of the payments less than 5%. What if for ABD goods or business reorganized to cooperative society banks? In the case of business reorganized to cooperative banks and taken for place during the financial year reduction and following section shall be as per section 32 depreciation, section 35D primary expenses, 35DD expenses or amalgamation and debenture expense 35DD voluntary retirement scheme. Deduction shall be following the proportionate of the number of days. Predecessor is equal to total number of deduction divided into number of days in 1st April to the date of immediately preceding the reorganization divided by total number of days successor procedure number of total reduction into number of days date of reorganization group divided by total number of days in the next section 30, 35, 30D, 35DD, 35DD shall apply to the successor subsequent years in which a reorganization takes place. ICD summary applicable to the ICDs applies to all the SSE following the merchandise system of accounting, VGBP and IFRS except the individual and HUF. It's also required to be kid audit and 44 AB provision accounting policy. ICDs recognize the concept of going concern consistency accountable. ICDs does not recognize materiality or prudence exemption except losses or violation of inventory, valuation of inventory, valuation of cost of net residual value lower. However, in the case of dissolution of firm value and residual value only, construction contract only the percentage of completion method for section 43 CB as well. ICDS does not apply to the service contract that is referred to 43B only. Revenue recognition, the agency receive the revenue is amount of commission, not a gross flow of cash flow. Received the consideration revenue from sale of goods should be recognized when there is a reasonable certainty it is ultimate collection. Revenue from service transaction percentage of completion, and the duration is the 90 days project completion method, and service are provided by the interdependent number of fact settling method. Tangible fixed asset, a fair value of tangible fixed asset acquired by exchange, the share of other securities or another asset held by its actual cost. Machinery spare shall be charged the revenue and when conceived example cartridge. When the spares has not been used in connection with the item, the tangible fixed asset and that is used expected when irregular. Capitalized. The effect of change of foreign exchange rates covered section 43A. Government grants and recognize for common grant which is a reasonable assurance and the person shall apply the addition attached to the transfer. Recognition therefore shall be not postponed before the date of actual receipt. Government grants with respect to depreciation fixed asset reduction from the actual cost of the LTV, and government grant is not directly writable assets acquired no pro rata reduction. Government grant is a non-depreciable fixed asset recognized the income and over the period over the cost of meeting obligation charged into income. Government grant is compensation of the expenses or loss recognize the income on the previous year's receivable, and the government grant recognizes the income over the period necessary to the match and related cost. Security sale to stock in trade. Initial recognition of the actual cost of acquisition, including brokerage fees and taxes. At the end of previous year, value of the lower initial recognition or net present value at the end of actually comparison of actual cost of NRV at the B categories wise and not the individual security, equities, debenture, etc. Borrowing cost is equal to borrowing cost related to acquisition. Construction, production, and qualifying asset. Capitalizing into the cost of asset through other borrowing costs are recognized as per the provision of Act. Qualifying asset include tangible and intangible asset inventories remaining more than 12 months to bring into the saleable condition. Provision, contingent liability, contingent asset recognition, provision, reasonable consistency, and reliable estimate amount of obligation. Gentry do not record integratory asset and liability. However, the record contingent asset, which is a reasonable certainty, this flow of economic benefit arise. ITGJG additional employee benefits section chapter introduction. Get what you queue. Okay. Capital gain. Section 45 section and profit gain raising and transfer capital asset shall be chargeable to capital gain. Section 2 class of 14 capital gain. Capital gain means a property of any kind whether or not granted to movable, immovable, transferable property include rights way of Indian company, include rights and management and control. Securities includes the FAI, including severe regulations. ULIP is an exemption. 10D doesn't apply. ULIP is a concentration in the capital assets such as ULIP is issued under the section first of 21 to premium to any modern such a guarantee of premium in the case of greater than 1 lakh ULIP. But the capital asset excludes stock in trade other than securities held by the FII and the consumer stores raw materials and other business purposes. Physical effects. Mobile property such as wearing, apparel, furniture for personal use. Personal effects do not include drawings, jewelry, archaeological collection, sculpture, any work of art or painting. Rural agriculture land in India following lands will not be considered as a rural agricultural lands at given area. Within the municipality or the cantonment board, jurisdiction over population more than 10,000 inches distance from the total limit. Distance measured aerially, population up to 2 kilometers, 10 to 1 lakh population is there not considered. Up to 6 kilometers from area population, 1 to 10 lakhs, up to 8 kilometers to more than 10 lakhs. Distance of local limit A, municipal property, then local consideration gold land. Following gold bonds issued by the central government: 6.5% 1997, 7% 1988, National Defense Gold Bond 1980. Bonds. The special beer bond identity issued by central government following on the asset related to the gold deposit and gold bond is issued by the gold deposit scheme 1999 and gold deposit certificate issued by the gold monetization scheme 2015. The interest of those bond certificates are exempted under section 10. Concept and jewelry issued within the wearable apparel. It is in personal effect. No, it is still a separate considered as a capital asset. Considered as a capital asset as a silver utility taxable. No, held as silver utility is personal effect. Where about gold utility is not personal effect against capital asset. Gold sovereigns, gold coin, silver basket for puja. It's not personal effect hence taxable. Short term, long term capital asset. Section 229A long term capital asset means capital asset is which is not short term capital. Or Section 2 Class 42E short term capital asset. Capital assets are listed securities other than unit. 12 up to 12 months, unit of UTI up to 12 months, unit of bonds, equities, a unit up to 12 months, zero capital up to 12 months, and listed shares, immovable properties, land and building up to 2 years. Other than capital asset, example, unlisted securities, debit oriented units of business trust 36 months. Summary of listed unlisted security listed 12 months unlisted shares 24 months securities other than shares 36 months. A rollover mutual funds which is initially 3 years beyond 3 years but is not recognized as transfer hence it is not contract as capital gain. And the year of rollover however it will be taxable in the head of redemption or option on scheme. In the case of transfer land and building it held as a capital gain in the that will be bifurcated on land and building separately. Determination of the method period of holding POH and explanation of 1 to 2 class 124A. Situation share in a company's liquidation period of holding equation exclude the period of liquidation date. Capital asset acquired of section 149.1 include previous owner of POH. Said SID covered in the capital asset POH account place a period of holding and account the date of conversion. ESOPS particular PO the period of holding accumulation recognized allotment of date of employee share of corporate of non-resident and redemption on the JDR class domestic requirement 5 BC. Date of request for such a redemption is made. Unit of segregation portfolio. The original main portfolio includes one portfolio. Subscription of rights issue. The allotment date or date of allotment. The allotment rights. Rights renounced are always short term. Bonus shares. The allotment date of bonus shares. Balance provision of section 47. Section 2 class 47 transfer is relation to capital asset include sale, exchange, relinquishment of asset or execution of right compulsory acquisition there is under the law. The asset is converted into stock in trade of business maturity of redemption of zero coupon. Transaction involved allowing possession of immovable property to be taken or retained in part of performance of contract 43A Transfer of Property Act. Association sells the property to the 1 year timeline. Date of agreement for date of possession date of payment to date of second section 14. What is the transfer date of taken date of payment date of possession when the possession is part of a performance transaction which is affected transaction enable the enjoyment of immovable property whenever he may become a member acquiring rights as a cooperative society or company on the ESOP of agreement of member clarification transfer including deposition disposition of the party which assets and any payment fee creating any interest in the assets of any other manner. So, directly, indirectly, absolutely, condition, voluntary, involuntarily, by way of agreement, release of entry into Indian outside India, otherwise, notwithstanding anything, transfer right has been charitable to the effect of the transfer right, shares of the company incorporated outside India. Redemption of preferential minus and relinquishment of rights, hence it amounts to transfer. Exchange of shares of one company to other shares or amount to transfer. Section 45 charging section any profit or gains arising from transfer of capital gains affect from BGP chargeable on the head of capital gains with the deemed to be income or previously in which a transfer took place. Centrally relevant date of transfer is not a date of agreement to sell but the actual date of sales at a sale in which title is actually transferred. Section 45 1A section 45 3 the section K is previous year tax and section 48 when the person receives any money other asset from insurance or damage or destructive of flood cyclone right civil distribution accidental fire enemy previous in the money other receipt fair market value so value of money of FMV of the other asset the receipt person amount received from the ULIPT exempt entity. Previous year amount received calculate manner prescribed. Conversion of capital asset into stock in trade integration benefit available respective year of convention. Here the previous year in which stock in trade is sold is transferred. It is pay 5 years tax and section cost of asset and pay of holding shall be the FIFO method. Transfer of capital asset by a person to a firm or a EOP, a BOE, capital redemption to become the partners members. Previous in the transfer takes place if any amount according to the BOE form, BOP, or BOE value of capital assets. Section 41 YA is not attracted with no sums received from the insurer, that is, it shall be debt loss and it will be no tax return. However, Section 41 in the determine the long term capital gain, short term capital gain, consider the date of destruction to the date of transfer. Section 45 to the asset is so converted into partly sold. Also, on the PGA previous year, capital gain shall be proportionately taxed in the previous year. Section 45 for the tax implication in case of reconstruction of the firm. Discuss later. Compulsory acquisition of any land. Secondary compensation awarded for the first instance of settlement of RBI. Taxable in the previous year amount part of the first receipt. Enhancing compensation by court or tribunal or other authorities. Taxable in the previous year which amount received under section 48. Cost of acquisition, cost of insurance in this case shall be nil. Subsequent compensation reduced by the court, recompute the capital gain, reduce amount of fair market value. The original compensation fully taxable in the year in which fully a party and received enhanced the compensation is taxable as when the expiration. In case of enhanced compensation where the amount is received pursuant of interim order, the capital gain only in the previous year final order, not the taxable when received wait for the final order, where the due to day the transfer enhanced compensation. At the end of the person, name became handled for the other person. The nature of capital gain enhanced compensation shall be the same as nature of capital gain for original compensation. Treatment of interest received for compensation and enhanced compensation 145B deemed to be income of the year in which received 56 to class 8 taxable heads of IF minus IFAC 57 reduction of some minus 50% of the interest shall be allowed. Joint development agreement in the case of individual achieve central government arise from transfer of capital asset, land and building both under specific agreement shall be taxable in the previous year of certification and completion of whole part of project issued by the competent authority. For the calculation of capital gain, FEC shall SDV is a share of land and building on the date of issue or certificate. Any consideration to receive a cash, a check or draft on the move. Provided above provision that as in case of associate transfer as share as a project before the issue of such certificate. The case of capital gain shall be taxable in the year transfer. Specific agreement means a registered agreement in which person owned land and building are both allowed agrees to both other person to develop a real estate project in consideration of share in which project. However, this without the payment of water consideration or project cost of asset section 49.7. The case of transfer of such a share of the project and cost of asset is equal to amount due to fair market value. Section 110 is an exemption capital gain and loss of budget in the individual nature of the central government are capital gain arising from the transfer of urban agriculture land. Land will be exempted. The urban agriculture land is preferred in section 2 class 40. In the case of agriculture purpose by HUF of individual pattern including previous years, transfer may have compulsory acquisition of consideration, therefore deemed to be capital gain cattle covered RBI. And the compensation here is included enhanced compensation exemption is only when the compensation when the sale of the land is on own bill of it's not attained exemption. This exemption is only for the individual achieved in the case of compulsory acquisition merely because of the compensation amount is agreed upon by associate the character of acquisition will not change the voluntary sale on acquisition of India thus. Section 1037 Special Exemption Land and Andhra Pradesh. Basic exemption in the India arising from transfer of special capital asset. In the land of individual who was an owner of the asset on 2nd June 2017 and the transfer of the asset under the land holding scheme of Andhra Pradesh exempt in the hands of such owner. basic specific capital asset means and building both on the associate second job the routine land pooling ownership certificate issue respect of the land pooling reconstruction plot and the address received on the scheme. The plot of the land stands within 2 years on the end of financial year in which possession was handed over them. COA in the case of transfer of specific capital asset like 1037A section 496 transfer of a asset after 2 years cost of asset is called STV on the last day of second half of the financial version. Section 46 capital gain distribution of asset to the company's liquidation. Distribution of asset to the liquidation and not considering the transfer in the hands of company where the shareholder receive a money asset on liquidation each share will chargeable to capital gain. The fair market value such company and market value minus dividend section 222C. Note that in the case of relinquishment of rights in the hands of shareholder capital gain distribution of asset to the company liquidation in the hands of company the distribution is not transfers no capital gain. The transfer shareholder 46 to distribution attributable to company profit to so deemed dividend section 220C taxable hands of shareholder money received plus fair market value of asset distributor minus the fair market value purpose section 48 considered to be company capital gain. Section 46 is capital gains on buying buyback of share and specific securities of ESOP in the hands of shareholder. Capital gains consideration cover from the company minus cost of acquisition. Capital gain taxable here in which as a purchase in the company buyback. Other related provision section 115B QA additional income tax in case of buyback in case of buyback shares of the domestic company for many of the amount of distribution income shall be liable to the income tax of 20% distribution income plus such 12% 4%. Additional income, dividend income, or distributed income means consolidated paid by a company. Buyback share reduced by amount which is received by the company for the issue of the shares. Registration basically the company buyback 2000 shares in May. Buyback shares at 500 and the issue price is 50. Now the company has to pay 20% distribution earning which is 450. Companies now have to pay 19 tax which is a share of buyback. Further, there will be no liability in the individual shareholder. Section 1034 example income arising on the associate being a shareholder or the account of buyback on the shares of the company refer to 10115 QE. Summary of the section in the case of hand buyback shares domestic buyback and other domestic ownership buyback specific security of other company additional tax and 115 QE no tax on hand shareholder except 1034A taxable capital gain buyback tax in the capital gain 46 transactions not record transfer. Nothing contains section 40 which shall be applied to the following transfer. Basic exception limit of the description of capital asset to the total partially of which you have committed transfer of capital gains and the gift of the irrevocable asset. Then no capital gain provided that the clause shall not be applied to capital asset being shares, debentures, one not allotted to the company to its employee and ESOP. Indexation of COE in the case of gifted asset to be computed with respect of the year in which previous owner finds asset and not of the year in which assessment became owner of the asset. The respect of the 43C of PGP between holding and 100% subsidiary. A transfer of capital asset to the company or property subsidiary if the partner company holds the whole of the share capital of subsidiary and subsidiary any company NA holding company transfer the capital asset to subsidiary as in stock and trade because of the essential transfer or conversion of application asset. Transfer of capital asset by the subsidiaries to the holding company if holding company holds the whole of the share capital in subsidiary and held in Indian company. Article including the subsidiary in the capital transfer capital and the holding company stock in trade as well as referred to the section 47A exemptions available in the schemes of amalgamation transfer of amalgamation company scheme of amalgamation where amalgamation is the Indian company the scheme of amalgamation transfer of share held in Indian company amalgamating foreign company to amalgamation foreign company if at least 25% of shareholder of amalgamating company continue to be remaining shareholder of amalgamating company. The transfer does not attack capital gain in the country in the incorporation of amalgamation company. A transfer of shares in the foreign company which derives a value substantial from shares of the Indian company by amalgamation of foreign company to amalgamate the foreign company if at least 25% of shareholder of the amalgamation company continue to remain shareholder of the amalgamated company. Such a transfer does not attract capital gain in the country of incorporation amalgamation. Any transfer of shareholders on the capital scheme of amalgamation of shares held by amalgamation if the transfer made in consideration allotment of shares in amalgamation company except the shareholder itself is amalgamated company. Amalgamation company is Indian company. In consideration of such a transfer of consists of something more than the share, the amalgamation company exemption 46 14 shall not be applied. Gautam Safari Trust section 49 companies of shares amalgamation only come cost of asset of shares amalgamation company. In the scheme of demerger, any transfer of capital asset by demerger company is resulting of company proper result of Indian company. In the case of demerger, minus any transfer of capital asset being in the shares of Indian company by demerger foreign company, result of foreign company provided that the shareholders is greater than three for the value of the demerger company to the remaining shareholder result and such a transfer does not attract any taxing authority which deemed for foreign company. A transfer of share in a foreign company deriving value of the shares of the Indian company by the demerger foreign company. The result of foreign company provided that the shareholding is three for the value of the demerger company. The remaining shareholder resulting for shareholder transfer shall not attract the taxation in which demerger foreign company so incompetent. The scheme of the demerger transfer share issue of shares resulting is for shareholders of the demerger with respect of made consolidation of the demerger out understanding. Cost of asset of the shares post demerger section 49 calculation of the resulting company A B is equal to A into B by C. Cost of acquisition of share demerger by into number net block of asset by total net worth plus general resolution before demerger of demerger deemed reduction of the bond method. In case of banking company corporate sector, the transfer of capital asset from the banking or banking institution scheme of amalgamation transaction by central government as well as the banking regulation and transfer of banking regulation of capital asset by purchases of cooperative bank to the taxes of cooperative bank to convert net banking account. The transfer of shareholders at the sense of recognition, the capital asset being the shareholder which is possessor of cooperative bank, transfer made with the recognition of allotment of shares in the successor cooperative bank and converting them to banking company. Transfer by under transfer of bonds of the government of India bond in the outside India by resident to another resident. Taxation of rupee denomination bond to Indian outside India by and transfer of bond of GTR, LTR, DR derivatives, other government security units of mutual funds or business trust made by the NRSC. Business account in IFSC which is considered to be payable foreign currency. You need to notify certain securities above such a exemption. Unit of REIT or I into VIT. Unit of schemes of fund management schemes launched by IFSC authorities. Unit of EITs launched by the IFSC authorities. Transfer of government securities made in out India by another account. The transfer reallocation of capital asset topic. So original fund to be resulting fund. Transfer location and the consider the shareholder of Unicode location shares as the held of original fund and the consideration should be the resultant fund. Important definition purpose of the class 7 AC is class original fund. The funds in corporation outside India with the fulfill following condition. The fund is not an PRI fund. The fund is recognized in the country in which is agreement of ITA. The fund is activity subject to the investor production regulation. The fulfill other prescribed condition. Investment vehicle is an Abu Dhabi Investment Authority. So shareholders and unit holders such vehicles wholly owned by the control ADI and government of Abu Dhabi. This fund is notified by Central Committee of reallocation transfer asset of original funds to the resultant fund on or before 31st 24 where the consideration form of shares in resultant fund. Resultant funds are fund established in the fund of trust and companies LLP. Standard certificates of registration AF regulated by the SBI and by IFSC. Transfer conversion security. The transfer of individual of gold bonds issued by RBA and other schemes are obtained by redemption. Transfer the conversion of gold electronic receipt issued by the vault manager or conversion of ERP code. The element section 49 one cost of acquisition scenario series code. Cost of acquisition is cost of a physical code when purchased and period of holding is being paid which code has been paid conversion. Yeah, gold to convert to gold when the gold is gold. Conversion of the bond debenture. Conversion of the bond or gold bond or debenture stocks or debenture certificate into stock shares or debentures. Company in section 49. Cost of acquisition of the shares and debentures. Cost of bonds debenture stock extra. Conversion of bond section 115 AC. The bond of an Indian company, a public sector company, issued by the foreign currency. The foreign currency exchangeable bonds are FEC into the shares of debentures in any company. Section 49. Cost of acquisition of the shares and debentures. Cost of bonds 115. Conversion of preferential shares to equity and shares of the company. And cost of acquisition of the equity shares is equal to cost of preferential shares. Acquisition of the firm by the company. Transfer of capital asset into intangible asset of the firm into company as a result of acquisition, provided all assets and liabilities succeeded. All partners of the firm became shareholder of the company, and the proportion means the capital accounts are not PSR under before succession. The partners do not receive any consideration other than allotment of shares. Agreement of shareholder with the companies of partners for 50% of total voting power. The company and contribute and continues to be 5 years of option. Note exemptions only for the carrying of business and not for the profession. This calculation of proportional shareholders added equity proportional shareholders. The transfer of capital asset intangible assets by a private company unless a private public company transfer of share with the shareholders and asset result of conversion with the LLP. Provision of all assets and liability transfer all shareholder become conversion become partners LLP and the capital contribution of under PS or LLP same proportional shareholder do not receive any consideration other than the capital contribution PS aggregate of PS or share of 50% and the time of higher margin. Total sales turnover previous promotion is less than 60 lakhs. Total asset of company 3 previous less than 5 lakhs. The amount is paid to any partner out of the balance of profit on the date of conversion 3 years of conversion. Section 14 total asset is equal to cost of shares in the company being conversion. Question of sole proprietor company transfer of capital asset intangible assets to the company result of exchange profit. All assets and liabilities exceeded a shareholder of the same proprietor company is greater than 50% of the total voting power in the company and it is continued to be 5 years motion. See, the proprietor does not receive any consideration other than the allotment of shares of Section 47E withdrawal of exemption. In the case of recurring corporation demutation, the demutation of corporation of RSA SRA Limited is a question of VOB conclude. A transfer of the company of asset to the was a demutilation or corporation of it's also exempted from the provision demutation corporation scheme of SAB. Indonesia intentionally skipped the transfer of membership rights by the members of RSA acquisition of shares and traded or clear rights. RSA's will SAB about him. A reverse mortgage transfer of capital asset is a transaction of reverse mortgage under the capital gains. Section 10.3 amount received by the individual as a loan, either lump sum installment or the taxation of the reverse mortgage is exempt under tax. And ABM advances CIT is held by the payment of outstanding loan plus 3% of the successor obtain clear from the title of the provider that the cost of acquisition successor 48 right of the section 55. Note that the benefits not the reverse mortgage, it is only for the notified scheme of reverse mortgage. Consolidation of scheme of plans and transfer of the unit holder unit or the consolidation scheme mutual funds main consideration allotment of consolidation scheme. Provide the consolidation to more schemes and two more schemes fund the exemption in a consolidation of one scheme give another schemes. Also, the position of consolidation is called preparation of consolidated funds. A transfer of unit holder to the unit of consolidation plan and mutual fund schemes made in consideration of allotment and capital as being a consolidation plan scheme. Cost of the unit of consolidation plan and cost of unit of consolidation plan. Other miscellaneous transfer of transfer of any capital asset by the Indian International Community to an institution established for financing corporation development. The transfer of any capital asset under the plan approved by central government and public sector to the another public sector company notified by central government to central government. The transfer of capital asset from the work of art, architecture, scientific art, and collection books, landscape drawing, painting, and photography school, the government, university, national museum, art, etc. Transfer of land, SIG unit, sanction scheme. Provided a transfer made on such as a company seeking not transfer review. The transfer scheme and lending of a security under the agreement entered into the borrowing of such securities subject to SEBI and RBI in transfer of shares in the SPV as business trust, exchange of units of the BT of transfer generally shareable company. The company's units of business trust cost of acquisition transfer adoption. Transfer of interest in the JV held by the public sector or exchange of shares to the company incorporated outside India of the government or the foreign state and the law of state. Section 49 cost of asset cost of acquisition of the interest in JV. Explanation to section 2 class 42 period of holding status ITA situation of period of holding share in the Indian company acquired by the Situation period holding. Share Indian company acquired for demerger, date of demerger. Share and the Indian company acquires amalgamation, date of amalgamation. Electronic gold reserve of gold prior to conversion. Gold release as per TRC, the gold prior to release. Share called venture of the company holding conversion. Preferential converted equity data preferential trading or clearing rights of RSI acquire the writing equity share to be due on the demarcation of the corporation membership prior to change. Unit of business trust allotted business transfer of shares, a unit of consolidated scheme, units consolidated scheme, unit of consolidated plan allotted, consolidated plan. Section 47E, draft exemption in the case of 47, 4 and 5. At any time during the previous 8 years on the date of transfer of capital asset 47.5, such a capital asset is converted into stock in trade or transfer company or holding company ceased to hold the whole of the share capital corporation scheme. Gain arising from this transfer C is no capital asset is not charged with section 47, 4 and 5. Now deemed to be income from the transfer of company chargeable to capital gain in which in the transfer takes place and not in the year of conversion holding cases of 10 shares in the holding 100% of the shares. Other relevant provision section 115 that 47 years not an assessment of the transfer company will be rectified by the 154 for the purpose of section 4 years into the wrong recording on the date of the conversion of capital asset to be SIT and the whole and CSP whole shares cost of acquisition transfer of company shall be caused in each such asset has been acquired by section 47 years not attracted in the capital asset is sold with transfer in 18 years which shall be applied in the conversion of the holding ceases of hold 100% of the capital asset. In the case of 47 years, 47, 8 and 15, section of sole proprietor account, there is a condition of 47, 8 and for 46, 9 are not supplied thereby transfer. Example 47 shall be taxable and the processor complained by the previous requirement and the complaint with it. In case of 47B, in successor of the company LLP in the contribution of 47 not completing the example transfer 47 taxable in hands of LLP and shareholder processor and the previous requirement not be complete. In the case of 47 9 11 transfer of membership of RSC shareholder exchange the shares of the receiver exchange of transfer of membership of RSC transferred anytime within 3 years. Capital gain with the exemption of 47 years shall be deemed to be capital gain the previous year took place. Summary 47 condition capital gains and had the previous year. Either the current asset converted stock into shareholder reduced to below 100% transfer tax like current year transfer took place. Shares in exchange of membership for sold 3 years transfer company to comply with the condition of session successor here to comply. The LLP does not comply the condition LLP here to comply. The computation of capital gain, the value of consideration, cost of acquisition. Cost of acquisition shall be for the interest amount in mutual action 24B or interest in the chapter 69. Cost of improvement of cost of indexation benefit and the exemption expenditure are wholly exclusively for the transfer brokerage time etc. Is attributable to the capital asset etc. and tax amount taxable to capital gain. Provision of 48 capital gain of share depends on the company in case of non-resident. Section 115B in the case of non-resident capital gain transfer of shares and debentures including bonds and income can be contributed to the following: convert the cost of company FPV the expense into the same foreign currency in the initial use of purchase. Short-term capital gains computed in the foreign currency has been converted into INR. Opposite manner calculation capital gains applied every reinvestment or sale thereafter. Section 105 method of conversion. Cost of acquisition is equal to average of TTBR or TTSL. Buying rate, selling rate, data of acquisition. Cost of expenditure and average of TT buyer, selling and transfer. Sale consideration is average of TTBR, data of transfer. Capital gain of FC to INR is TTPR, buying rate on the rate of conversion. TTPR, capital gains, buying rate and rate of conversion. Association with Robert Boyd Solutions as a mini company and which acquired 15% share acquiring share and committed to 50,000 in India. We sold share. So buying rate, selling rate, buying rate of 15, okay. Competition capital gain 1000 equal to selling consideration. Sale consideration 1200 into 43 74 plus 76 74 plus 76 by 2 and then 73 so 75 by 43 43 into as cost of acquisition representation. So capital gain on the transfer of 28,070. So, gain on 30 rate 20. And then applicable to assets are purchased on the foreign exchange with cannot reinvestment. Provision mandate and out of strength cannot be applicable to provision failing of resolution. And the application of the asset are purchased on the foreign currency in the case of reinvestment. Provision of not application long-term capital gain in the equity share of the gain for the business trust. Second provision of party indexation available only when long-term capital gain. And the indexation the cost of asset is equal to CA by transfer. CA the first year of asset of one from choice later. The computation of COI is equal to COI of COI by BY of transfer. COI is the first year in the asset is held for choice later. Transfer the first year children choice later. The cost of inflation previous year 100 $160. It is 348. Provision benefit of indexation not available in case of following assets. Yes, the provision, first provision, third provision, fourth provision, in the long-term capital building is not available to capital gain in the case of non-resident equity share units of EOF or units of BT bonds and dependent export of capital like indexation and SCG. Depreciation asset always market linked debenture specific and discussed later as slum sales on the left. After provision of 48, 5th and 6th in the case of non-resident capital goods due to the appropriation of fee against a foreign currency, redemption of redemption Indian currency held by India ignores appropriation. If the benefits of this provisions available only in the case of non-resident, but also bond the date of redemption it is in not transfer pennies. The sixth provision, in the case of ESOP transfer by the employees under the key of the revocable trust to the farm market value is market value data transfer. Seventh provision is amount paid to SUT shall not be allowed on the expenses. PGP. Deconstruction from section 9, section 9b, 45, 4, 48, restricted to ADA. Relevant provision specific entity of the government record the form from a PV or specific person that in record with the partner relation. Deconstruction was specific from admission 1 or only more than 1,000 members. It used to be partner members, it used to be sharing system partner. Section 99b is a set of capital asset of stock of the resolution and the solution or resolution are relevant provision where the partner receives any capital asset or stock entry in both of the firm in connection with the resolution. The resolution or reconstruction therefore shall be deemed to be transferring as a firm. In the case of previous in the capital asset to be stock is received by the partner, which a transfer shall be taxable on the PGP and capital gains as may be in the case of fair market value and the fair market value cost shall be fair market value of asset and stock on the date of receipt by the partner. Section 45 4 of the charging section of capital gain. Relevant provision when the partner receives any money, capital assets or stock in trade or both from form this connection with the resolution to the reconstruction. Therefore, the profit arising from the receipt shall be chargeable to income and forms under the head of capital gain. The previous money and capital gain is received by the partner. Computation of profit or gain arising from this head PG cannot be negative. It is B plus C minus D. Value of money received by the partner such as rate of receipt. Value of money received by the partner and date of receipt. The fair market value of the capital asset received by the partner and date of receipt. The balance of capital asset is a partner of the BOF form at the time of reconstruction. Ignore the increase in capital asset and the balance of the date of revaluation. Assets are self-generated goodwill or self-generated asset. Without when money capital asset received or stock not allocated, which is the partner from the firm connection resolution reconstruction where the provision of 44 shall be operated in section 19. Section 43 mode of computation and capital gain in case of a 45 4 applies to the following amount shall be reduction from the fair market value. Amount calculated the tax on the income the firm should be contributed to the capital gain being transferred by the firm which is calculated by the prescribed money. Section Rule 8 AB attributed to capital gain 45 4 where the capital gain of 45 4 related to the revaluation of capital asset valuation self-generated asset or self-generated goodwill based on the report of the registered value. Attribute to capital a proportion of the increase in value valuation revaluation does not relate to the revaluation of related or relates only to the capital asset acquired by the partner, not attributable done. A form is furnished details in the part attributable to the form fee, form 5C on the benefit over the due date of given. The rule applies to the capital asset forming part of block as well. Rule A to 43. Amount attributable to 45 for up to long-term problem short-term determine our column. Which explain the capital gain attribute to capital gain. Short-term capital gain depreciable asset generating asset of goodwill. Long-term capital gain. Amount of particular long-term capital short-term depends on the nature of gain in capital capital as money. Short-term estimate depreciable assets will capital as well. Long-term capital. For example, 1 to 3 of IC in section 49 the cost of base of asset provision compensation cost of A plus B cost of previous plus cost of the incurred in the previous incurred by assessing. The capital asset becomes one of the layer of distribution of total partial and partial and appropriate suppression in front of the devolution distribution of assets and liquidation under the transfer or the revocation of the trust under transfer of 47 under the achieve transfer under section 46 64. Flat rate template segregation of Vodafone Idea bonds. Section 49 cost of asset calculation due to a unit of generation portfolio cost asset is equal to net asset portfolio transfer net asset portfolio to a unit of portfolio cost original cost minus arriving amount arriving above POH of past cost. In the case of unit segregation duty including POH units of main portfolio transfer of property in kept under section 46 the capital raised from the transfer of property which is subject to tax in 46 to cost value of consideration of computation and 26 to X. Other cases on transfer of asset declared and income declared to a scheme to 16 market value of payment of tax penalty and surcharge. The total transfer of capital asset after the conversion to SIT fair market value date of conversion transfer of transfer specified securities for equity share the 172 from fair market value 172 and shares acquired by the non-trusted under the assumption of GDR that is selling price relieving and the SRE topic on the date of requested adoption. Section 15 special provision of capital gains and the replication as well. Section 50 CG in the case of market like potential. Specific mutual fund. In the case of capital asset being a unit of specific mutual fund acquired after 1st April 2023, market limit debenture MLD, there is capital gain arise and transfer of maturity therefore shall be deemed to be short term only irrespective of the period of holding tax reach and deduction shall be on the STT against income. Explanation MLD security which is underlying a principal components form of debt security and whether returns is linked to the market return under the underlying security and including any security classified with the MLD, SBI, SMP, the mutual fund is less than 35% of total proceeds invested in equity shares of the master company. Slum sale. Section 2 class 20 category slum sale means the transfer of one or more taken by the means slum sale consideration without the considering the values of individual assets and liability. Determine the value of assets and liability last stamp duty either similar purpose shall be recorded as assigned value. In section 50B slum sale, any profit arising from the slum sale shall be chargeable to tax on the capital gains nature of capital gain. When undertaking the owner is less than 36 months short term, immediately long term. For the computation of capital gain, the slum sale, fair market value, fair market capital assets, capital on the prescribed rule 11 UAE, cost of acquisition, cost of income, net worth, short borrow, equity mutual exemption, net worth. The aggregate value of total asset minus liability of the books of account ignore the amount of account or revaluation asset. Aggregate value of total asset total asset type and value of asset. Depreciation asset represented our value maximum 43 6 self-generated portfolio asset wholly or introduction of the theoretically other asset book value. Now the indexation is not available on the case of capital gain in respect of long-term capital gain. Report of capital gain for the report CA shown before specified first one and clear it upon the claim, indicate the components and net worth and carry and certify the partners that valuation for market value section role 11 higher of fair market 1 and 2 fair market net asset method and sale price of the because of fair market value. Jewelry artistic open market value register or sale as security fair market value to develop in UK more properties STV value others stand of other other asset books value net of income tax paid before expenses total asset book value liability exclude PUC paid capital provision and declared dividend curriculum reserve curriculum provision of tax curriculum provision of meeting unascertainable liability curriculum contingent liability except dividend area and actually total asset liability area of dividend accumulated production cannot article factor sale price method and the sum of following money arise received value of money received is equal to fair market value of share security receivable and standard STP STP method real property received or open market value of monetary transaction whichever is higher when you receive. You can transfer agreement specified individual value of certain section 15 million transaction no PGBP shall arise in case of slum, sale, and stop and transfer and of losses. ADS the understanding shall be with carry forward transfer of section 50 C FEC 7 random building symbol to 43 CA PGBP liability that is in transfer of asset between land and building above consider in such a transfer less than the stamp duty value turning less than sequence STV shall be deemed to be full value consideration compared to BGP exemption STV shall be exceeding one time much consideration amount actual consideration for deemed FEC the date of agreement of date of registration date of agreement date of registration on the same they had date of agreement covered by the same consideration seen as received by eligible mode account pay transfer account pay check and yes account transfer and payment the post evaluation officer by assessing officer officer value is standard values rather than permanent value and rate of sale number is rate of SCVs has not been disputed by any appeal dismissed. Therefore, as for the evaluation of valuation officer, the assessment of value officer is that the value officer prepared and the final of the then the value of valuation officer then the final valuation officer. Section 115 between the assessing assessment stage second classification value of the construction has realized value of transfer of production position and conservation threshold transfer to a charge is greater than the market value and production sympathetic is transfer of concept of production 11 transfer of unproduction share of company that represent application of CG to 4 1 that is substantial value director and such director is transfer of judicial policy and the resolution plan forward director. In the case of section 47, it's not a considered transfer only. In section 55 CA, it's not apply. Generally, in the TCA is a transaction of T62 not affected as a transaction between the relatives of T62 is not applied to then OTC continuously apply. In the Ivana and coded shares and bought for 1 lakh transfer, the relative sell to stranger and sell to relative. Second consideration is in the so The farm market value transfer is 4 lakhs is FVC farm market consideration 57. Capital gain is nil. Reason is 47 attract 56 relative conservative. Because of sale ranges I consider 1.5 F1 is 4 lakhs and 4 lakhs. Capital gain is 3 lakhs 4 minus 1 2.5 lakhs is reason is FME is equal to FEC then 2 minus 4 minus 2.5 is 1.5 percentages. Sell to relative 1.5 market 4 and 3 capital gain is market value is equal to consideration. So relative small and tax section part of the relative and tax section 50 market value will deemed market in the case of in case of assessed by the consideration related to normal asset and market value should come consideration. Summary of section 40C, UTC, UTC, UTCD. UTC, the land and building is greater than 100% of the market STV. Yeah, market is equal to standard DV. UTC, unique and correct matter of consideration to the UTD, the any request where the considerations not ascertainable from value. Section 51 advanced money received. The tax treatment of advanced money for future failure to negotiate the transfer of capital asset. Advance for future of first April, the deduction of the charge bonds of capital asset. The chances taxability are proportional of the year in which transfer capital. And advanced for future after tax under the IFO processes. And the liability attracted in the year of forfeiture as advance has been for future previous years. Exemption under capital gains section 154 and 54 culture section 54 capital gains being a residential large and property investment property associate income individual achieve original asset long term capital gain being a resident HP outside India new asset investment capital gain around in India purchase a resident house within 1 year or 2 years after transfer of construction of resident property 3 years as a capital gains of the lower again be cost of capital gain by the cost of new asset or deposit lock-in trade lock-in for new asset 3 years and later answer after 3 years and purchase of construction cost of use in the capital gain. Additional point at the capital gain or sale of original asset is less than 2 crores as a can avail exemption of purchasing of construction and residential option or option basis options available for lifetime. And the cost of a should be asset should be 10 crores ignore the amount exceeding 10 crores. The capital gain deposit account scheme, the assessing and deposit the utilized amount before the due date in the nationalized bank of the capital gains account and deemed cost of new cost of acquisition plus income plus amount deposited. Return of income shall be accumulated proof of the deposit. Amount deposit exists 10 crore shall not be taken into account. And taxation of capital gain tax. The assessee is unable to utilize amounts or deposit within a specific period. Deemed income of section 45 previous year of 5 years. Data transfer expires and assessee is attained to withdraw from this amount. Concept clarity where there's no condition, no new house has been used, where new house should be used as assessee with the own resident purpose became let out, but it should be a resident house no condition where the new house should be used as assessee. Well, construction of a new floor existing owned by the property considered production, yes. Assessee invested in the whole amount of capital gain for purchase of new asset and the name of his wife is eligible for deduction, yes. Whether purchase of two flat adjacent to each other common meeting point even it is both flats are earlier occupied by the two defendant and both the flats are eligible for reduction and CAD. 54 share does not release in the construction should not commence in the transfer period of transfer also does not compensate the same money received from the transfer should be used for construction. Therefore, the cost of land and cost of construction incurred prior to transfer shall be considered as exemption 54. Exemption 54 holding of legal title on necessaries into the transfer and the transfer pay fair market value of the purchase agreement and exemption 54 is available. Baltraj CIT and the release of the co-owners of shares of co-owner property favor of associate without the purchase of associate exemption CIT. Residential property, residential house is sold in 2023. Residential house sold in 2023. 39 crores, purchase value, integration 9 crores, capital gain 1 crore. So the cost of new asset purchase construction 40 lakhs, cost 1.5 crores, exemption of T4 40 lakhs, exemption 1 crore, taxable 40 lakhs. In the case of asset sold within 3 years 80 lakhs, the new asset sold in 33 years for 380 lakhs, and the cost of new asset will be considered and the amount of taxable capital gain is 2 crores and 1.5 crores. The new asset will be considered as 55 crores and more tax will into crores 1.5 crores. Section 54B capital gains of urban agriculture land investors in agriculture land. An individual partner achieve original asset urban agriculture land being used for agriculture purpose for 2 years immediately. Proceeding 2 years in new asset and any other land which is for 2 years. The capital gains lower of ANB capital asset a cost of new asset deposit in the lock-in for new asset 3 years. In the case of transfer within 3 years of purchase, cost of asset shall be deducted in the amount of capital gains. In the capital gain deposit, the amount in the capital gain deposit the government pays amount before the in the nationalized bank under the capital gain scheme deemed cost of new asset the cost of actually incurred plus amount deposit. Return of income 139 one shall be accumulated in the proof of subsidy deposit. Taxation on capital gain when the assessee is unable to utilize amount or deposit within the specific period deemed income is equal to previous year or 2 years on the date of transfer expense. Assessee entitled to draw from the amount. CAT Goram Masing merely because of assessee owns was shown on the co-owner of the agriculture land. Sale deed deduction 44B can be done. Section 44D the capital gain of the land and building a compulsory acquisition. Assessee including asset compulsory acquisition of land of building a right therein formed part of industrial whole activity. Being used for business for 2 years. Immediate transfer. Industry undertaking means an undertaking engage in the manufacture or processing of goods and business activity. New asset within 3 years, no transfer or purchase another land and building or right or construction of any building or industry sale happening lower of the capital gains the cost of new asset deposit. Lock-in for the new year 3 years in the case of transfer of 3 years of purchase the cost of asset shall be reduced from the amount of capital gains this capital goods deposit lock-in scheme. The assets of any deposit unutilized amount before the due date 139(1) nationalized bank and capital gain deposit account. Deemed the cost of this is equal to cost actually incurred amount deposit. Return of income is equal to 39 shall be accumulated in the proof of the deposit. Taxation of capital gain in NDS when the assessee is unable to utilize the amount so deposit within the specific period. The deemed income of the period is equal to 3 years in the date of transfer expense. Assessee is entitled to withdraw such amount. Section 54E investment in bonds assessee any assessment including original asset long-term capital gains and also both. These buildings form part of a PGPP block and held for as more than 24 months. It shall be considered as a long-term capital gain desired for the depreciable asset. New asset within 6 months on the transfer whole part of capital gains invested in the long-term specified asset. Long-term specified asset is equal to any deemed of any bond redemption after 5 years issued by the National Highway Authority of India, Electronic Rectification Corporation Limited, Power Finance Corporation Limited, and Indian Railways Finance Corporation. Capital gain exemption lower of capital gains amount invested in long-term specific asset maximum 15 lakhs and lock-in for the new asset. In the case of transfer or conversion of bonds and available to loans and advance of security such as IVS tax in the capital gains which is a year in which transfer or conversion. Capital gain account the option of depositing amount capital gain and deposit account not available. Conversion to SI abstract in case of conversion of capital gain to SIT subsequent in the case of SIT 6 months on the account from the date of such sale exemption 54E. I understand that when the payment or the purchase of eligible bond were made within 6 months, but the bonds issued only after the period of 6 months reduction allowed. The CIT would be transferring CIT 54E available only when there is an actual transfer of capital asset or not in the cases of deemed capital asset. Liquidation 46 deemed transfer of asset hand of assessee and not eligible for reduction 54E. CIT Dempo Company in the benefits of section 54C available to SIT sale of depreciation was at 50 held that the 54 EC share does not differentiate between the capital and non-depreciation. However, section 50 is a limited application that is sale of consideration SIT is only for the purpose of 40 and 40 therefore 15 for EC applicable. Section 54 of capital gains from the asset invested in the residential property. Assessing individual house property including unasset, original asset, long-term capital gains other than resident house property. Note that transfer is not a plot is eligible for exception 54. New for universal non-transferable net as a concentration of India. Purchase residential house within 1 year or before 2 years before the transfer. Reconstruction resident within 3 years transfer. Capital asset if the new asset is greater than the consideration of old capital gain exempt the new asset is less than the consideration capital gains for new cost of asset by net consideration. The cost of new asset is greater than 10 crores if not about excess of 10 crores. A lock-in for the new asset where as a new asset is transferred within 3 years. The capital gain exemption is 54 shall be taxable in the long-term capital gain previously in which they have been transferred. The cost of acquisition are reduced when the computation of AG as a capital gain as a new asset. Withdrawal of exemption when the SSE purchases within 2 years of construction within 3 years in residential house property other than the new asset capital gain exemption 54 shall be acceptable long-term capital gain previous such houses purchase or construction. Additional point assessment should not more than one resident property data transfer purchase of any resident property other than the new asset within 2 years after transfer or construction of any resident property other than the new asset within 3 years after transfer. The income on the new resident property is not taxable of as property. Capital gain deposit account scheme. The assessee may deposit unutilized amount before the 39(1) in the nationalized bank of a capital gain deposit account. A deemed cost of acquisition cost of actually incurred amount deposit. Return of income 139(1) shall be accumulated due to proof of such a deposit. Amount deposit exceeds 10 crore shall not be in the account. Taxation of capital gain tax account. The assessee is unable to utilize the amount so deposited within the specific period. Deemed income of previous year, the 3 years of the date of transfer expires, and the assessee of entitled to withdraw from the amount. CIT Sambam Venkumar. The exemption of 54 F generated on the ground of construction was not completed in the 3 years due to the pendency of a certain furnished walking tile electric etc. Here that the exemption is allowed and the assessee had taken possession and living in the said premises despite of the basic pending of Gauli Mahadeepa video. Then the format value is equal to SDB into 50 UC is a reinvestment made in the acquisition of residential house property in excess of the actual rent net sale concentration. This concentration exemption of 54 respective of the source of fund and says the net concentration is 50 lakhs and SDV is 50 lakhs, indexation cost 35 lakhs and share is 15 lakhs. 35 minus 50 lakhs. The fully exempted 50 lakhs and fully exempted 54 F. Section 54 is the transfer of industrial underlying outside of area. Assessee any assessee, original asset, plant and machinery, land labor and plant and building rights of land and building use in the industry underlying urban area transfer process of shifting business to another area. New asset within 1 year, 3 years on the date of transfer. Assessee purchase a new machinery, acquire the land and building, construct a building, incurred expenses, capital expenses, over ABC and also lack in the also 3 years of transfer of 3 years of just cost of asset shall be reduced. Fiber board advances paid to the purpose of central goods for arising of the transfer of furniture does not qualify the exemption of 54G. Section 54G, a transfer of industry undertaking outside the urban area basis. Provision section 54G, override section 54G, by section GD to the central government, transfer of urban to urban area. Section 54G to transfer of urban area to a section where the urban area, that area, all the provision of 54G mentioned. Section 54GB, capital asset being residential property sold and amount received in the contract. Remove IC model Section 54 Haji capital asset being residential the purpose of Section 54, 54B, 54D, 54EC, 54EF, and 54G. This transfer of original asset is and we have compulsory acquisition. The period of acquisition of new appealing exemption. The records in the date of receipt of compensation or not for the date of compulsory acquisition. Generate note when the exemption pertaining to capital gain, not really exemption was to go to exhaust against capital gain and the incidence of tax in case of short-term capital is more than the case of long-term capital gain. Summary of section 54 to 54. eligible 54, 54B, 54D, 54EC and eligible individual achieve individual partner parent achieve any SSC and not including non-resident 54 and original residential house property agriculture land urban 2 years 54D land and building right up 2 years industrial revenue 54 land and building and both 54 EC 54 E of any long-term capital other than her right house property resident house property 54 years nature long-term long-term situation transfer compulsory acquisition acquire action transfer amount of amount to invest capital gain net sale consideration 54 years consideration the net asset house residential property and new asset any other land from the agriculture purpose land and building NHEI RECL PF resident house property is one live limit 1 year 2 year 3 years property on the construction 3 years so 2 years in unlimited purchase of construction for 3 years 54 fixed months purchase 1 to 3 years or construction 3 years exemption lower the capital gains investment proportionate to the net standard value maximum amount 10 crores not normal 50 lakhs 10 crores lock-in period 3 years 5 years 3 years what's the transfer looking into cost of budget shall be reduced in the amount exemption 54 exemption withdrawn so unutilized capital gains 3 years 2 years 3 years 3 years unutilized capital gains other points capital gains is less than 2 crores reinvestment because a lot of the long-term capital integration is eligible for issue benefit and capital asset that comes for 6 months from the sale of SAT now owned and owned is greater than the 1% property on the date transfer not the plan not a PNC or another which is 1 year Section 54 Hutch and transfer compulsory acquisition time limit for invoicing shall be reckoned from the date of receipt conversion not the date of compulsory acquisition. Section 55 meaning of cost and improvement cost of acquisition for purpose of section 48 and 49 as and shall nailed in the following capital asset goodwill no and right of manufacturer and process of acquisition no right to carry out any business provision no right in the right no. In the case of any other capital asset, the asset became property of assessing before one of the complex incurred one after one, making in accommodation alternation capital asset. That case captures incurred after the became property, making additional alternation case. Cost of incursion being included the expense which is allowable in the deduction of the other head. For the head of section 48 and 48 and 49 cost of acquisition will be capital asset form of acquisition cost of acquisition goodwill trademark land brand other intangible asset right of manufacture which may be articles right of carrying PGB tenancy right stage of carrying permits loan harms and other right the purchase on the previous owner the cost of acquisition is amount of purchase price case following 94 white base and KF 10 such as a task purchase of previous owner purchase price of previous owner other cases as this case of goodwill value as he has claimed the depreciation 34 prior to 2021 amount which depreciation is deducted and the calculation of cost of acquisition in the case of capital asset the option taken FMV on the 1st April 2021 shall not be available even the asset is acquired prior to 1st April 2020 where the virtue of share and security assessee becomes entitled for subscription to additional shares and security rights amount of additional shares and security without any payment of bonuses cost of asset and the original share security is called subscription amount actually paid acquisition right of renounced favor of asset nil right of rights amount actually paid acquisition the bonus shares nil shares of purchase of person whose favor right shares is known amount of purchase price and person announced in the amount in the above cases the option of the fair market value is 1,420 available even for bonuses cost of acquisition EP bonus settled on the shareholder sorry demutilation corporation schemes cost of acquisition original share is equal to share market exchange provided that the cost of acquisition be traded in the clear rights of acquiring of shareholder who has been allotted equity share under the scheme. In the case of long-term capital gains following assets of the fund section 112A, equities of the company, unit of EOE of units of business trust. According to the first of February 2018, cost of acquisition higher than actual cost of the asset or the lower of the fair market value or fair value of cost of achieving sale of therefore fair market value so that the capital asset to the fair market value shall be listed in the 31st no trading on 31st check the immediately preceding day of the trader highest price quoted in the RSI in the unlisted it varies with value set date and not listed at 30% but listed after now cost of acquisition is equal to CII on 1718 CFA every acquisition of CII listing of RSI is a date or stock acquisition it's okay on the date of the transfer on which became property of RSI and concentration on the share 31st March 2018 and transfer of what is on in relation to the annual capital asset. Capital asset and cost of acquisition of the asset becomes property before 1st April 2001 with the market value of 1st April 2001 out of SSE. But SSE became some property of SSE by the mode of 49.1 and then it became property of the previous one 1st April 2021. The cost of previous one of the fair market value on the 1st April 2021 of the portion of the SSE. The previous provided that both are mortgages in the case of land and building fair market value is April 21 shall not be exceeded the standard TV value STV value and as the asset on 1st April 21 the asset becomes a property of liquidation 46 the market value rate of extinction the shares and stocks company becomes property due to the consolidation conversion and reconversion division the cost of acquisition of the asset is calculation on the cost of acquisition of shares and stocks of other assets and derivative. The cost proportionate previous owner cannot be ascertained. Cost of acquisition of previous owner is the way a farm according on the data in which asset becomes property of owned by previous owner. Concept clarity check the bonus share is the cost of acquisition after one firm to before one with the fair market value of one allotment before 1st February 2018 the SCD right actual cost of acquisition is cost of lower of fair market value of acquisition. Section 55A reference to the valuation officer. The AO is reference to the valuation officer and the following the cases where the value of asset is climbing assessing as per the estimate made by residential value or not a VO assessing officer option is valuation is variation with the fair market value that the VO is option of fair market exceeds the value claim is assessed by prescribed limit of prescribed 15% less than claim value 20%. Having a record nature of the other competition, he was option of answer it was the assessee has chosen to fair market value registered value action 1st April 2021 cost acquisition which is cases where your first VO is how to win the amount of variation in fair market value the cost of acquisition February 28 100 lakhs fair market value purchase value 150 lakhs EVO believe that fair market value is very intense actually FMV is transferred via case to the EVO summary of section 118 112 112 section short term short long term and short term capital asset short term long term as equity short unit of equity unit fund versus BT long term any capital asset 112 less than 900 big equity shares a unit of EOP and a unit of EF STT pay STT is charged during the transfer of share contract no other condition no STT paid on the equity shares on acquisition unit of the VO for the PT most transfer and another transfer STT exception then attached or leave say consider the residence of credit in IFSC considering action no other condition not applicable in the say undertaken in the which is stock exchange located in the IFSC and considering the consideration is for face value AFC tax rate 15% residential individual achieve domestic and other individual 20% in case of action that are among the capital gain above 1 lakh 0 up to 1 lakh 10% indexation benefit has increased not available indexation short term available not available long-term capital benefit of BL available to residential individual chapter 6 residents not allowed the gain section 87 allowed and non allowed provision of section 118 in case of long-term capital gain lesser gain entity that are long-term capital gains lower of 10% capital gains without taxation not 20% without taxation the equity oriented funds means equity set up with mutual funds that are calculated ULIV schemes and the scheme The equity-oriented fund means the fund set up by the mutual fund schemes and ULIP schemes, and the minimum 60% of the total proceeding investment have equity shares and listed domestic companies. In the case of other amount, the invested in the other lesser quant and the money of 90% of the total voters are listed. Other funds and such funds invest in 90% of the total proceeding equal listed companies cost. Case law and the principal CIT Gujarat statement. A fertilizer bond as was sold in the loss in the open market. It is a business loss of business loss of atonement. Quotas are subsidies acceptable under the PGB and lock lease and later CIT later. Fertilizer bond issued by the issue of fertilizer subsidies was sold with a loss of opening market. The business is loss on the loss of the subsidies are taxable on the BGB and the loss due to sale of fertilizer bond based on the business loss. Shakti Metals and the word position is as a dominant part of the blockchain characters, not in the business profits or years. The code is no longer the associates continue business asset as a retained as a character of subsequently profit and size of sale of should be some content and CIT Aditya Kumar and Joksha amount income associated towards a preferential title of a property acquired through the will and would be further sale it is acquired non cost of asset. Yes, the cost of acquires forming part of title, household rights and complete ownership. The board considers the cost of asset. Be not afraid of going slowly, be afraid only of standing still. Income from other sources. Section 56 charge section income from other sources. It is when income which is not excluded in total income is chargeable and the income cost is chargeable and other has particular income without judicial of the section following income from the event in the case of section 2 different income distribution of the income accumulated profit capital asset of the distribution entered at least or part of others and if accumulation profits is distributed cash at the wages or it is accumulated profit distribution cash with the dividend in the accumulated profit distribution kind in the calculation asset market value of asset as a state of distribution shall be deemed dividend at the distribution of company debentures or available as a certificate in the without interest the distribution of shares or equity shareholder by way of bonus the etc as accumulated profit calculation market value of the debentures deposit certificates of bonus shall be deemed dividend distribution of the liquidation of extent to which distribution attributable to the accumulation of profit before the liquidation but calculation distribution made out of profit you owned after the liquidation shall be the distribution redemption of the capital action by profit. The payment of closely held company any some extent to the accumulation profit by way of advance alone to a beneficial owner or a shares not being a shares entitled to fixed rate of return then without right of particular profit 10% of not include in any concern the shareholder members or partners on the substantial interest on behalf of the individual benefit of shareholding. The following of the loans are advance which is not considered as a deemed dividend. The advance are loan from the shareholder to shareholder considered as an course of the business trading money substantial part of the business of money. Dividend is set off with the companies against which hold a part of the loan advance previously deemed dividend and extent of which is set off. Concept substantially interest concern means the beneficial or enter 20% of the income 20% voting power into reserves creating out of profit shall be part of accumulated profit and the share premium is not accumulated profit because it is not credited out of profit. Subsection repayment of loans advances does not make any difference in applicability of section charging interest in the material rate or relevant. Under the exemption, dividend does not include distribution under the capital clause 2(3) with respect of the rights issue on the full cash transaction as shareholder is not intended to participate in the surplus asset accurate shareholder payment under the form share the distribution of share pursuant to the demerger resulting to shareholder demerger with respect to the amount as the reduction of capital gain demerger. The accommodation profit above the accommodation profit including profit up to exemption. Class A, B, D, F, E, one day distribution of the payment of payment does not include the building so for the accommodation profit or above profit, the accommodation profit is equal to profit Property actually 1911, the date of possession, payment of dividend, not including the building of automation application of CIT. Jawaldar Ramu, when the acquisition due to the compulsory acquisition of government accommodation, profit shall not include profit of 3%. In case amalgamation profit can be increased by accommodation profit, amalgamation data of accommodation. And if the compulsory acquisition takes place in 3rd November, ignore the profit earned by doing the financial year, including the profit. Treatment of tax advantages. Trade advantages, which is the nature of commercial transaction, which does not treat advantages and treatment of the deemed dividend share inclusion. Case law judgment, the CIT, creative tying and printing advantages are advanced made when sister concern adjustment against due of job do what does not be considered deemed dividend. CIT mixing the advantages to shareholder install the plant machinery and the promises enable him to do the job on non-dividend. Author engineering security deposit given the system concern against the use of electricity generation beyond the use of security concern. Non-dividend trade advantages of a shareholder to view effective commercial transaction. Non-dividend year to taxability dividend. Type of dividend taxable year final dividend declared. Interim dividend is unconditional made available to shareholder. Deemed dividend amount disputed are deemed dividend to A to D, advance loan paid to company shareholder. Dividend is acceptable in the normal tax, no special rates, but such charges applicable at 15%. Such charges applicable at 15%. Provision year and taxable in the year distribution preference section 56 dividend chargeable under IFRS 57 distribution section discussion under interest period of 50%. 8 in the GIT domestic company include dividend from the domestic company. Foreign company dividend is equal to dividend received restricted up to the dividend up to 1 month 194 receipt of 10% dividend. TDS paid individual is equal to amount greater than 50,000. So amount of tax note 115 voice in dividend distribution tax on the hands of company. Section 1034 tax about exemption and dividend of shareholders not applicable anymore. Case 11 to the dividend parallel plastic section 245 the test of determined substantial part of business. Various part of the turnover, profit, number of employees, capital employed should be considered with evaluating whether the following consider business profit. Without was onboarding any excess expenses or repair in accordance with respect to purpose and the shareholder having substantial interest for the deemed dividend. The repair expense cannot be treated as a payment on behalf of the shareholder of the dividend to benefit. Therefore, can no dividend. Prateek Kumar Malhotra is loan advance given by shareholder extended benefit of the company and deemed dividend. The advance provided by the company benefit rather than gratuity loans and significant cannot be considered as a dividend. Can a financial transaction ambassador travels can a financial transaction entered into other course of business is deemed dividend. Other COC involved booking a resort from the customers and the company is concerned and entered into normal course of transaction or part of a transaction. Such financial transaction cannot be concentrated as a loan advance as a receivable deemed dividend applicable. Issue of share closed held by the company is no fair market value where the company has the company receives a consideration from any person but investment was an issue of shares at excess of fair market value. Aggregate concession of the fair market value is the process. Definition of fair market value fair market value is higher the value determination for prescribed under any substantial of the company satisfactory based on this value assessing hold ineligible to certain data ineligible to the data of issue shares. Valuation company face value fair market value issue price acceptability face value 100 fair market value 120 issue price 120 120 by 110 UPC 110 20 110 to 1 taxable or not taxable issue price less than fair market value face value 100 issue price 98 fair market value 88 is greater than 98 issue 98 not applicable 100 190 fair market 90 but issue no 90 so but 90 10 20 but issue price is 20 90 20 100 so issue price is greater than fair market value not okay. Non-applicability when the clause does not apply whether the consideration of the issue is considered when venture capital understanding venture capital or venture fund When a company may pause a notification center cover for the particular when the about classes start on apply such a notified company and current which company pays a company with any of the conditions are in such consideration to see the excess of value shall be deemed income in the payable previously in the failure play considered also deemed to be company and for also the reporting income and presentation to 70 notification center government notifying company person the provision of section shall not be applied in the compulsory issue and charge the following person common related central bank sovereign wealth fund banks certificate important insurance company following entities such as the SEBI CAT investment fund activities of investment university hospital etc pension fund or the law sovereign fund broad-based pool investment vehicle which is greater than 550,000 provision of said power is not required company which will fulfill the condition of Ministry of Commerce and Industry files required declaration. Ministry of Commerce notified the eligible startup company meets certain condition to be exempt from the provision of the taxability of gift. When a person receive any person amount acceptable life some more money consideration aggregate amount of the whole aggregate amount of them give more property with the consideration of Sanata STV STV when irrespective of the CDV consideration is excess of the higher than 40% excess of STV consideration. Note the case of IP only in the data boards compare each property separately when the properties other than IP with concentration. The aggregate of family considered that's a whole aggregate and property or IP concentration is less than 500 but excess of aggregate amount of consideration if the person receive gift say property around 40,000 property B and value of 40,000 the aggregate both is 50,000 and 50,000 acceptable. In the case of subclass A deals are received from a non-resident or resident other than non-resident PRI resident in India shall also taxable. Registration above of the taxable difference. Example gift more property case Sanada STV consideration difference 5 lakhs 5 yes yes 5 lakhs yes difference exists after 40,000 so 10% of 45 lakhs that is 45 lakhs actual amount 5 lakhs 50 consideration 48 lakhs 2 lakhs no because the difference between is not 10 percentage of the so consideration 10 percentage of 8 lakhs 10 percent 6 lakhs so difference 2 lakhs no problem. Provision of class B, which is talking about property, data agreement of data registration, when there is an agreement of data in the IP and data registration are only seen STV and DO may take into the class provided that amount of consideration part that funds paid and paid on DBT, other account pay checks and banks or draft as prescribed. Reference of the valuation amounts and the STV and the IP is disputed by the assessee on the ground of mentioned in 50 C2. Assessing officer refer to the valuation IP and valuation officer provision of 50C is it upon 5 exemption clause gift shall be acceptable. The clause shall be applied to the money and property itself. From a relative matters or relative or occasion of marriage or individual valuable a baby incurrence or consider exemption the clause of gift shall be issued not taxable from any relative occasion of marriage where under the will or any other consentence of death of heirs from a local authority municipal party from a foundation municipality education university education institution hospital etc. From a trust of gratuity institution which is 20 B or C money property received by the receiving person from the fund institution from the other section not a from individual trust only created for the benefit of relatives of an individual and another prescribed manner for individual or other person for related medical treatment by which a member of family 3% of the employer or decreased person or any other person or 10 lakhs and cost death is COVID payment received of 12 months in death. In the case of death of COVID payment received within 12 months of death are subject to the completion of the central government. Definition family, spouse, children, dependent children, process either relative spouse, process system, individual house and process systems of either parents or individual, any asset, of spouse and members of family property or capital asset, stock and trade being intellectual property, land and building, shares and securities, bullions and jewelry, architectural drawings, paintings, sculpture works, is a property including items which is in capital asset hands of course not car is not covered in the property, some machine is not covered, occurs not in the capital asset hands not covered property. Capital hands not covered property, capital asset. It's not called a capital asset, it's called as a property. And the issue of bonus share received by the EHS taxable under 56 to held and the issue of bonus shares capitalized reserve merely allocation of the companies when there is no influence. Any profit derived from the shareholder receipt of bonus shares adjusted with the depreciation in the kind of equity shareholder by the originally held at 56 to shall be attacked. In case of a property under 56 to later sold, then the capital cash support shall be deemed to be value consideration taxable. Some received by the life insurance policy 56 to any is received including the bonus under the life insurance policy is not exempt entirely other than some received in the utility key insurance policy and taxable IFO some received minus aggregate premium paid during the terms of insurance but on claim under the deduction process. Resultant in the exemption under the sum received under the life insurance policy on following income shall not be included in the total income. Sum received under the life insurance policy including other income sum received in utility some is received under the key insurance policy some received under the key insurance policy except the death of other person insured rate premium paid only in the percentage of the 20%, almost 100%, 15% larger severity, severities of regulatory severity. However, exemption shall be applicable in the following cases. The exemption in the case of death of person ULIP under section 1 to 21 premium, any is greater than 21 liabilities in case of more than LNP. A life insurance policy is issued by 1 for the premium of the PY and is greater than 50 lakhs in the case of the policy. Summary. Under three types: some receive death, spouse, life insurance premium policy exempt taxable on the premium greater than 10 lakhs, which is 1 year greater than 5 lakhs near LIP exempt no limit to 10% of 5 lakhs. Exempt for children's life insurance premium exempt taxable premiums greater than 10% of disability. Exempt no limit of 10% of will be exempt taxable 1 lakh 10 taxable 3 years 10% of the amount of credit to 0.5 lakhs per annum. Key and taxable.